Oil plunges below $29 on prospects of more Iran crude. China worries. Thank you for watching the Shikama Live Show with your host, Shikama. Oil prices crashed 6% on Friday to close below $30 a barrel for the first time in 12 years, resuming this year's breathtaking rout as Chinese stock markets fell further and traders brace for an imminent rise in Iran's exports. After closing higher for the first time in 8 sessions on Thursday, U.S. and Brent crude futures plumbed new lows, taking this year's losses to more than 20%, the worst two-week decline since the 2008 financial crisis. The slump was not over yet. Some analysts warned as the lifting of sanctions on Iran opens the door to a wave of new oil, the International Atomic Energy Agency, IAEA, is expected on Saturday to issue its report on Iran's compliance with the agreement to curb its nuclear program, potentially triggering the lifting of Western sanctions. Shares in China, the world's number 2 oil consumer, tumbled on Friday, with the Shanghai index ending down 3.5% to its lowest close since December 2014, and the yuan weakening sharply offshore. Adding to fuel demand concerns, U.S. data showed retail sales fell and industrial production weakened in December. Brent LCOC1 settled down at $1.94 or 6.3% at $28.94 a barrel, sticking below the pivotal $30 a barrel mark after briefly dipping below the level in the previous 2 days. It fell as far as $28.82, the lowest since February 2004. U.S. crude CLC1 ended $1.78 or 5.7% lower at $29.42 after hitting a contract low of $29.13, its lowest since November 2003, earlier in the session. The oil market is oversold after 2 weeks of almost unrelenting selling. Some traders said the relative strength index, RSI, fell this week to below 30, a technical level often regarded as signaling a market that has fallen too far. Bearish traders may rush to take profits on short positions next week. Short positions in the U.S. contract rose to a record of more than 200 million barrels in the week of January 12, according to U.S. data. Quote, I think we will see a hard bounce in crude oil, $2, $3, $4 back up into the mid-30s, said Philip Streibel, senior market strategist at RJO Futures in Chicago. I think Philip Streibel is a maniac. Even before Iran's sanctions are lifted, Iran's oil exports were on target to hit a 9-month high in January. Tehran is expected to target India, Asia's fastest-growing major oil market, as well as its old partners in Europe, with increased exports once sanctions are lifted. Despite oil prices hovering around new multi-year lows, analysts say that prices have not hit the bottom yet, with demand likely to ease in coming weeks, especially with refiners beginning to shut for routine spring maintenance. A further fall in prices cannot be excluded, said Commerzbank analyst Carsten Fritsche told Reuters Global Oil Forum. He warned that $25 a barrel is quite possible, but not much lower than that. He and Kramer are in the same barrel as calling the lows. Who here agrees with me? Give me an amen. Thank you for watching the Shikama Live Show. I was going to go into a complete education on the oil and gas industry, but I wanted to keep this video short. If you want me to do that primer on oil and gas to learn about it, leave a comment below. Thank you for watching the Shikama Live Show.